Right now, as we speak, Strive Inc., trading under the ticker symbol ASST on the Nasdaq, is exchanging hands at exactly $1.10 per share, pushing up by $0.050 or 4.76% on the intraday session. If you are looking at the screen, you are seeing a stock that has broken through a critical psychological ceiling at the $1 mark, creating a green candle that feels significantly heavier and more consequential than the percentage gain suggests. The market is moving fast, and the tape is painting a picture of aggressive accumulation that contradicts the sleepy penny stock narrative that has plagued this company for the better part of the last year. Most people looking at a $1.10 stock see a lottery ticket or a leftover scrap from a forgotten tech sector. They expect a company struggling for liquidity, perhaps one that is diluting its shareholders just to keep the lights on. That is the expectation, a dead money trap that you should avoid unless you are gambling. But the reality is entirely different, and frankly, it is one of the most aggressive arbitrage plays currently unfolding in the small cap market of late 2025. What you are actually looking at is not a struggling social media service, but a company that has effectively transformed itself into a leveraged Bitcoin Treasury vehicle, trading at a fraction of the valuation multiples seen by its larger peers. While the street was sleeping, Strive Inc. pivoted from its legacy business model to become what is essentially a junior micro-strategy, hoarding Bitcoin at a pace that defies its market cap. The tension here is palpable. The market is pricing this like a legacy tech failure, but the balance sheet is beginning to look like a crypto-native fortress. This disconnect is where the opportunity and the extreme risk lives. If you think this is just another day of random noise for a microcap, you need to look closer at the volume. We are seeing trading volumes surging past 32 million shares today, significantly higher than the average session volume, indicating that institutional eyes are finally starting to verify what the retail bulls have been screaming about for weeks. When we analyze the price action we are seeing right now at $1.10, it is crucial to understand the mechanical dynamics at play. The stock opened this morning with a gap up, capitalizing on the momentum from the broader crypto markets, where Bitcoin has been trading well above the $100,000 level. Strive Inc.'s movement is no longer correlated to ad spend revenue or social media engagement metrics. It is now mathematically tethered to the spot price of Bitcoin and the company's ability to raise capital cheaply to buy more of it. The $1.10 level is acting as a localized breakout point. For months, the stock has been penned below $1.05, acting as resistance where sellers would step in to offload bags. Today, those sellers are exhausted. We are seeing a clearing of the deck, where the ask side liquidity is evaporating, forcing buyers to bid up to grab shares. This is classic price discovery in a repricing event. The market is trying to figure out what a company is worth when it holds over 7,500 Bitcoin but is valued at under $1 billion. If you are sitting there with your trading app open, whether you are using the Robinhood app for quick execution or the Fidelity mobile app for deeper research, you might be tempted to just look at the percentage gain and think you missed the move. That is the amateur take. The professional view requires us to look at the implied volatility and the delta of this move. The stock isn't just going up, it is expanding its trading range. We are seeing the Bollinger Bands widen significantly on the 4-hour chart, suggesting that a new trend is being established, not just a momentary spike. The Relative Strength Index is heating up, pushing towards 70, which some might call overbought, but in a momentum breakout driven by a fundamental shift in asset base, overbought conditions can persist for weeks. This is where the algorithm-driven trading bots on interactive brokers platforms start to trigger buy signals, creating a feedback loop that drives the price higher. Let's pause for a second and consider the macro environment we are navigating in late 2025. We have interest rates stabilizing, but inflation concerns are still lingering, which has kept the bid under hard assets like Bitcoin. In this environment, a company like Strive Inc. becomes a proxy for inflation protection, but with a kicker. The kicker is their strategy of issuing preferred stock, specifically the SATA series that just listed, to fund Bitcoin purchases. This is financial engineering at its most interesting. By raising capital at a fixed cost, the dividend on the preferreds, and deploying it into an asset that is appreciating at a faster rate, Bitcoin, they are attempting to create an infinite money glitch for the common shareholders. The common stock, ASST, at $1.10 is the beneficiary of this spread. If Bitcoin goes up 10%, the net asset value, NAV, per share of Strive might go up 20% or 30% due to this leverage. That is the math that is driving the volume today. Now, I want you to take a moment and engage with this idea. It is a polarizing strategy. Some think it's genius. Others think it's a ticking time bomb if Bitcoin crashes. Comment below how many shares of Strive Inc. you currently hold, or if you are staying on the sidelines because you think the Bitcoin Treasury model is too risky. I want to see if the sentiment here is fear or greed. Drop a comment right now. Moving back to the chart, let's talk about the common ground that most investors share regarding the stock. The general consensus has been that Strive Inc. is a confused company. It started as asset entities doing Discord and TikTok marketing, which is a low-margin, high-churn business. The common ground belief is that pivots rarely work and that small caps engaging in crypto treasury strategies are usually just trying to pump their stock to sell offerings. This skepticism is healthy. It's what kept the stock depressed at 80 cents and 90 cents for so long. However, the contrarian take, and the reason we are seeing this move to $1.10 today, is that the pivot is already complete and successful. They aren't trying to pivot, they have pivoted. They have over 7,500 Bitcoin on the balance sheet. The marketing business is now just a legacy footnote. The market is realizing that even if the operating business goes to zero, the liquidation value of the Bitcoin holdings puts a floor under the stock price that is rising every day Bitcoin stays above $100,000. We need to discuss the institutional flows we are seeing. Snippets of data from the last quarter show that major players like Bank of America have increased their positions significantly by over 5,000% in some reports from the last filing period. When a conservative custodian like Bank of America or a quantitative fund like Engineers Gate Manager LP starts buying a $1 stock, they're not doing it for a quick scalp. They're positioning for a structural repricing. They're likely using the Interactive Brokers trading platform or similar institutional-grade pipes to accumulate shares without spiking the price too hard. But today, the secret is out. The volume confirms that retail investors on SoFi Invest and Robinhood crypto circles are catching on, creating a pincer movement where both retail and institutions are chasing limited liquidity. Let's verify the mechanics of the trade for those of you using different platforms. If you are on Schwab Intelligent Portfolios, you might not see this stock in a robo-advised basket because it's too volatile. This is a self-investing play. You need to be in an individual brokerage account to access this. If you are using Fidelity Brokerage, you might have seen the news feeds flashing about the SATA Preferred Stock listing. This is crucial context. The SATA listing was the green light. It proved that the capital markets are willing to give Strive money to buy Bitcoin. If they can sell preferred stock, they have a perpetually open credit line to buy more crypto. This removes the liquidity risk bankruptcy thesis that bears were using to short the stock. If the bankruptcy risk is off the table, the stock cannot trade at a distress discount anymore. It has to trade at NAV. And right now, $1.10 is arguably a discount to the future NAV if their accumulation strategy continues. Comparing Striving to its peers is instructive here. Look at Tesla stock. Tesla holds Bitcoin, but it's a car company first. If Bitcoin doubles, Tesla stock might go up 5% because it's diluted by the manufacturing business. Look at Apple stock or Nvidia stock. They are pure tech plays. They don't give you direct leverage to hard money assets. Then look at the direct competitors in the Bitcoin proxy space. You have the giants, but they trade at massive premiums. Strive is the small cap version. It offers higher volatility and higher potential beta.